Hello, everybody. We will
Hello.
work on that transition eventually. We'll get like a cue fade in
A
as soon as I
timer.
could figure out a digital mixer or something else like that. But hello, everybody. Thank you for joining us. Thank you for being here. It's what 3 weeks ago. 3 weeks ago was our last episode. Is that right?
Yeah.
So
Yeah.
last weekend was PAX East and also Galen's moving weekend, which is a whole lot of fun. I'm sure we'll hear lots of fun things about that. The weekend before that was Easter, so it was we weren't streaming for the holiday, and now it is the holiday known as tax holiday or tax due
T-
date.
Today
Um,
normally would be tax day.
yeah, today normally it's funny. Today is actually April 15th, but
Hmm.
uh, because the 15th falls on a weekend, they give you to the Tuesday. So look, don't ever say the IRS isn't generous. They gave you an extra 2 days, right? They know the Monday would just be foobar if they try to do it on the filing deadline of Monday, so they went to Tuesday. Yeah. So there you go. Today is tax day, tax weekend, and this is our tax time hotline. So this is for you to submit all of your last minute tax questions. No judgment here, or at least minimal judgment from Galen and I, because I know. Just to be frank, I'm not in a position where I can judge. Yeah, so I have my extension in because believe me, my tax situation is quite complicated. But yes,
It's all those
so
offshore trusts and the hidden money and that kind of thing that really adds up.
there's a reason I was looking up that publication 17, right? Yeah. Okay. But before we get into it, let's go ahead and kind of give you the background. Galen, why don't you tell the people in chat what your brand, your business is all about, and then I'll give the disclaimer.
I think we have
Part
a
of that
command,
whole
right?
part of that was you have to kind of give us the previously on your brand, your business.
God, how long? It was so long ago. I guess we got the notes.
Yeah, and your
Oh
voice
no,
seems shot too.
there's a no. It just I'm distracted. There's a problem with. I haven't actually talked a ton. I guess I did yesterday because I had client calls, but my wife was at a bachelorette party this weekend,
Ooh,
and I've just been staying at home unpacking boxes, basically from the move.
unpacking boxes. I don't
It's
even
been
know.
super fun,
Yeah, I don't even know what the air quotes could be for. I don't even know what else you would be doing besides unpacking boxes. Probably playing video games, but that's about
a little bit.
it.
But now I was gonna say now my mic's up here in the new setup, and so it's harder to do the close up
Okay.
for the voice. Previously on Your Brand, Your Business,
Yeah.
we talked about tax tips and practices because at that point people actually had time left to do things, and believe it or not, I had clients come in after that and try and get stuff done before tax time. We've been scooting in under the wire on some of the things with some of my
Yeah.
clients, which I would have loved to have started a lot earlier, but you don't always
No.
get the info you need or the
No.
person early enough or.
Yeah. Yeah. And I think, uh, yeah. So last time we were talking about tax tips and practices, and I think one of them we tried to stress last time was, and that was 3 weeks ago, as we mentioned,
Hmm.
was if at that point, um, be very gentle and be very courteous to any tax professionals you're approaching at that point. Um,
Ernest
that
is cracking as
Yeah,
far as I can
that
tell.
probably goes 1,000 times over if you're trying to approach somebody come Monday and saying, uh, "I need tax help." One,
See, it's
yeah,
actually not hard on Monday because the answer is just extension,
oh
extension,
yeah,
extension,
if they even
extension, right?
answer you, yeah,
Yeah, exactly.
even
There's not even.
if they even take your call, and if they don't like just plain out curse you out and then hang up on you, they will just file an extension, and if you're self-employed, they probably suggest that you put some sort of estimated tax payment, right? And we will get into
Yeah.
that also. So, but yes, before we get into all of that, actually, we do have to give you a disclaimer, which is specifically, Galen and I are licensed professionals. I'm an attorney, Galen's a financial planner. However, we're not your licensed professionals, at least not yet. Although I do see some of my clients in chat, so disregard that. If you are a client of mine and if you received an engagement letter, you are I am your licensed professional. But still, everybody else, unless we've signed an engagement letter, I am not your licensed professional, although we could be, right? The purpose of the information and of the stream that we provide today is all for education. It's general informational purposes. It doesn't reflect Twitch. It doesn't reflect StreamerSquare. It doesn't reflect anybody else except ourselves. And we're giving that to you so you can be more confident in asking those questions and for any CPAs or attorneys after April 17th, right? Don't ask those questions before April 17th. So that's the disclaimer. Also, these tax questions are pertaining to U.S. income taxes and U.S. taxes. Opinions are our own. These are for U.S. taxes. There's no attorney-client privilege or financial planner-client privilege being established here. This is just us talking to you.
Joel, I thought attorney-client privilege was dead.
Yeah, take that from... I don't even want to touch that one, man. Like, I normally be like, which dumbass said that, right? But then we all know which dumbass said that, so... Yeah, so I'm just steering clear of that one. He's wrong. Now we're steering clear of it. Okay. Now that we've gotten that out of the way, and actually let me go ahead and do the right thing. There. Disclaimer. Now that we've covered our bases, we're going to go over tax FAQs, or frequently asked questions. If you do have tax questions now you would like us to address, please go ahead and join our Discord. There is a StreamerSquare Discord, and actually I have it pulled up right now. We also have a Your Brand, Your Business channel. So please ask any questions that you would like within that Your Brand, Your Business channel, and we will be getting to them. Actually, we can get to them right now. Because
we'd originally been thinking about doing like a call-in show, and then Joel remembered that he's a lawyer and he doesn't trust any of you. So we decided that you should please type your questions.
Yes. So if you type your questions, I'll read them out for you. I'll even try to impersonate your voice if I know what your voice sounds like. Right? If otherwise, I'm just going to impersonate some ridiculous voice, and that's what I'm going to do.
I want to hear your Hunter impression.
Yeah.
See him in the chat.
Yeah. I'd have to think about that one for a little bit. But go ahead and ask your questions. If you really have like a multiple part question and it seems that we don't have any reason to suspect that you're just going to come on and troll us with your call-in, then we could do some call-in stuff also. But feel free to ask it in that Discord. Actually, you know what? Please ask it in chat and in the Discord. The reason I say for both chat and Discord is because it's less likely to get lost in scrolling chat if it's within the Discord. But if it's in chat, we will do our best to try to catch those also.
We're going to let resorties get lost in the scrolling chat.
Yeah. We did try to crowdsource questions, but let's just say that we didn't get any questions, right? So we went ahead and Googled what some of the most common questions are. So we do have quite a few things that we can ask or we can answer there. But
Googled, please. I just took questions that people have been asking me.
That's true, too. Yeah. I figured, well, some of the questions I got were probably not worth repeating. So, or at least there were two specific. Oh, that's the other thing. Please keep your questions as general as possible. You don't want to be giving out your private financial information in the form of a question here live on Twitch chat. So, I mean, we're not responsible.
Say a friend hasn't paid their taxes in the last 3 years. And
yeah, we will answer that specific question too, though. Yeah. But for now, if you have a question, please go ahead and post it within that Discord or within the chat. If you want to be extra attentive, please go ahead and tag Galen or I in Discord. I think we're both live. We're both in that Discord, the StreamerSquare Discord. I am String at Law. Galen is Chickenators, right? Or what's your Discord? It's like Galen.
Yeah, it's Chickenators.
Yeah. Okay.
I think.
Yeah.
Yeah, it's Chickenators and then in parentheses Galen.
Okay.
My stupid mic is in this new setup unplugging and plugging. Can you hear me?
I can hear you. Can chat hear you? Chat, can you guys hear Galen?
It's 50-50. You know what? Fine. It's my webcam mic right now, but as long as it's still okay, I'll just use that and figure out the stupid Blue Yeti thing later.
Okay. Yeah, they can hear you. Yep. So
okay, cool.
Your voice did just change, I guess, so just because of the different quality.
It's now with the shittier mic, the one that's in the webcam instead of the one that's I paid $100 for and still acts stupid all the time.
It kind of turned you into a prepubescent boy because your voice went up like an octave or two.
Oh, really?
Yeah. Yeah. But I think that's just the sound quality. So. All right. So if you have questions for Galen, prepubescent Galen, and I, just go ahead and please post them in Discord. And
well, we just got one, which is programs for tracking expenses. At what point should you cut off write-offs if you are your own business, write off pretty much everything. So that's a great one. in terms of tracking expenses, there it depends on how you go about it, I'd say, in the sense that there are, for most streamers, they should use something like QuickBooks or FreshBooks or Wave, which are different accounting softwares. QuickBooks being the most comprehensive and the most expensive, FreshBooks being sort of in the middle, and Wave being free. So QuickBooks being the most expensive, Wave being free. And you can do all of those like that if you're like trying to track expenses as a part of an organization. There are some tools like Expensify that can help with that kind of thing. But if you're just on your own, sole proprietor, single member, LLC, or something like that, any of the accounting softwares is good. I personally use FreshBooks, but that's because they could also do really effective invoicing at the price point that I needed at the time. I am switching over to QuickBooks. And the reason I'm switching over to QuickBooks is what Resorty just said, which is I used TurboTax this year for my self-employment tax, or to pay for my own taxes, or to do my own taxes, and they include a year's subscription to QuickBooks because I want to keep you locked up with them. At what point should you cut off write-offs of your own business and write off pretty much everything? So we talked about this in a previous episode with Ernest, but your write-offs are the things that you can write off for the business are anything that are ordinary and necessary for running the business. But there's also a piece of that that's more applicable to streamers and other types of businesses, which is that there's a gray area of things that you would already use. So like, you're not supposed to write off meals at home, even if you eat them like while on stream, because say you bought something like Soylent specifically because it was easy to eat on stream without interrupting the stream. You still would normally eat, right? So you can't, like, those kinds of things you can't really write off, but like if you were to go out to lunch with someone specifically to talk about something for business, that you could write off. In terms of things that are in the ordinary and necessary category of expenses for business, Ernest's philosophy, and I agree with him on this one, is write off everything you can. I have had a couple of clients come to me from Ernest where we're talking, they're telling me their stats. It sounds like it makes sense to work together. We sign an agreement. I get some of their information from Ernest, and I have a brief heart attack because I'm like, well, I have a brief heart attack because I just see the quick like adjusted gross income figure, and I'm like, holy shit, I should not be charging this person money. And then I go and look at like, oh no, okay, they just wrote off 70% of what they brought in. It's not that because they were doing upgrades in that year or because they were very aggressive about the write-offs, those kinds of things. You should be very diligent about logging everything you make, and then very diligent about writing off everything that you can.
Yeah, I would agree with that too. And I think, and this is where Ernest...
Here's an example. I bought a new cell phone because my old one was in the process of crapping out. Obviously, I use this cell phone for things that aren't business, but I wrote it off as a business expense because it gets used mostly for business, honestly.
Yeah. I mean, like the correct way of doing that would be you calculate what percentage of that is actually used for business, and then you take that percentage, right? But no one, while the law might kind of call for you to be that nitpicky, no one's actually going around to be that nitpicky, right?
Yeah.
So 100% of cell phone bills, including purchase price of the equipment, I think that's pretty standard. I just have a few points to add to and then expand upon on what Galen said, but everything he said is 100% correct. Ordinary, and as the law states, ordinary and necessary expenses for a business expense, right? So these are, when people say write-offs, sometimes they think about expenditures, sometimes they think about deductions, what have you. Write-offs in this sense are business expenses that you would be taking on your Schedule C as part of your income tax calculation for your net income as a self-employed individual. So what I mean by that, ordinary and necessary does not have to mean required, right? So to give you an example of what is a required expense, my legal license fee, right? The fee that I have to pay to my state's bar association or bar commission, that is required for me to keep my legal license and to practice. That is definitely a business expense I can write off, or to be completely technical, to deduct from my net revenue, from my gross revenue. Yeah. What is a ordinary and necessary expense that is not required, right? Subbing to other content creators, because you do that as a form of business development. You do that to support other content creators. You do that to kind of develop a networking relationship with them. That is not required. However, that is very common within the practice, right? And when they talk about ordinary and common, this is one of the few instances where the definition of the industry matters more than the IRS's definition, right? Because most of the time, it's not whether you can justify it as a expense, it's whether the IRS believes your justification and would also find it in a similar way. In this sense, they do rely on the industry standard.
I'm one of 2 financial planners, I bet you, who can confidently say, yes, I can write off Twitch subs. I'm sure there are other financial planners who sub to people on Twitch, but I'm only one of 2 that I know of where I could like confidently say that and back it up really easily.
Yes. Yeah. So ordinary is, and this is specifically directly from the IRS, for quote, common and accepted in your trade or business. Necessary is one that is helpful and appropriate for your trade or business. It does not have to be indispensable to be considered necessary. So that's when we're talking about what write-offs you can take, right? And then to answer Biparlafaw's question regarding how much is there a cutoff, right? And Ernest is a CPA who we had on our show 4 weeks ago. I would highly recommend everybody to go check out that VOD after this show. He's understandably couldn't be a guest today because he's probably neck deep in work for tax season, right? You should
just DM him just to see like how many responses you get, because the dude is caffeinated out of his mind.
Yeah. And like when you were asking a percentage of being aggressive when it comes to having your write-offs, I don't think 80%, there's no like 80% is the magic number. And then if you go over that, you're going to get audited. If you go under that, you won't be, right? You can definitely go under that and still be audited. You can definitely go over that and not be audited. Be as aggressive as I would say you can, knowing that if you need to back up all of those write-offs, that you're able to back it up and back it up in a reasonable way. You can definitely write off more than your actual income, right? Mm-hmm. That's what we call an operating loss, right? It's not uncommon for businesses to have operating losses. I've had businesses that have operating losses. We do have to be careful about the only time you kind of have to start worrying is if you have consistent operating losses, because then the IRS will start showing, businesses are, by the IRS definition, a venture that you're intending to make profit at some point, right? So nobody's going to be in business at a loss for 5+ years, right? Unless there's, I think I saw the other day, Netflix has been operating at negative cash flow for a while. Uber, I think, has been operating at loss for like several years, right? So
but that's the reinvestment stuff. Yeah. I mean,
so there's a lot of different things going on. Netflix is reinvesting into tons of original content. Uber is investing into self-driving cars, which, good luck to them after recent stuff. But that's all. There are legitimate reasons for them to have an operating loss, and I can guarantee you they have accounting departments to help them back that up. Right?
Yeah, you think.
Yeah. As a streamer, can you be at an operating loss for a long time? Yeah, you probably can, but you probably don't have the same type of reasons as the Uber or Netflix would have. And eventually you're going to get into territory what we call hobby loss rules, right? A hobby is what the IRS defines as a venture that you do without the intention of making profit, and they say that you're not doing it to make profit because you've had a loss for so many years. In that instance, you can only write off as much as you actually take in that hobby, right? But there are ways that you can still demonstrate that you are consistently operating a business to be at you're profit seeking, but you just haven't had profit for God knows how long. But you'd have to back that up, and oftentimes you'll be backing that up in front of a judge in tax court, right? So that's not necessarily a position you want to get to. But long answer short, there's no threshold or roof where I would say you need to cut off your write-offs. In fact, I would say don't cut off your write-offs as long as they're legitimate write-offs. If you have legitimate write-offs, write off everything, right?
Completely agreed.
And then just make sure you can back it up with those aspects that we just discussed in mind.
Right. Completely agreed. Yeah. Like I said, I mean, we've Ernest and I have worked with some clients where, because they're successful full-time streamers, but in a particular year they did a lot of upgrades, so they paid a lot for contractors for certain things, where their adjusted gross income figure looks extremely low, but they brought in a lot. And do we expect that to be the same the next year? No, right? We don't think that they're going to do those kinds of crazy hardware upgrades again, or they did a revamp of their like branding or remotes or something like that. That's not as common, right? So like, especially if it's just like hey, this year was nuts, when you've already been doing well, like no one's going to look at that weirdly.
Yeah. And there was a follow-up question on how you would, and I think Galen answered it in chat already, about how you would deduct or write off subs. And business development, there's a category within Schedule C that I think is specifically for marketing, which you can throw it under there. That's fine also. Let me just go ahead, and I apologize for the typing. I'm just pulling up the Schedule C in front of me right now. And the expenses categories that they have there are, I mean, advertising is applicable. There, you could also do it within, I mean, there's a whole line that's 27As for other expenses, right? And then you pretty much just list out other expenses that within a follow-up. There's a part 5 that's on the second page of Schedule C, or part V if you want to be, word or specific about what's actually on there. It says other expenses, list below expenses not included on lines 8 through 26 or line 30. You can just write marketing expense, business development expense, and then just the amount.
Yep.
Let's see. Are there any other questions before we start diving into the ones that we... Aperture, that's correct. Yep. The categories can be kind of... You have to think about it this way, right? So Aperture, your question was related to what Viparlafaw's question is that... full-time streamers can write off subbing to other channels. It's not even limited to full-time streamers, right? If you're a part-time streamer, you can still do that. Also, it's still a common and expense. It's an ordinary necessary expense that is part of this trade or business, right? So you can definitely...
You try and be reasonable about it too. Like I have some subs to friends that aren't going to be clients because they're in different countries, for instance. I don't write those off, right? Yeah. Like... Because my practice is focused on US-based content creators, I don't write off my subs to non-US content creators. Or I have some I have some actually clients where I'm a tier 2 sub, and I did that before they were clients. I write off the tier 1 sub and not the tier 2. Piece of it, if that makes sense. And
that's Galen being extremely practical, right? Like if I had to make an argument for either one of those, let's say I was Galen's tax attorney in front of tax court, tax judge is asking why that you had deducted these subs, right? And let's say Galen actually did write off a sub to somebody within the UK, right? Who he would never be Galen's client, but this particular streamer is well known, and I would argue it's a sub that's a part of business development for a referral source, right? So even though he can never be a Galen's client, he could potentially become a referral source.
I could definitely write these off, and I'm sure Ernest, if he's watching this, is rolling his eyes right now because he's all on me to be a little more aggressive about that kind of thing. So like, I definitely could.
Yeah.
I just am choosing not to because it makes my life a little easier, and that's $60 in total we're talking about.
Yeah, and part of that is like, Galen can probably sleep a little easier at night knowing that he's not trying to, he's less...
I could confidently say that I am fully, could confidently say, if needed, that I am fully behind the ordinary and necessary nature of that expense.
Yes. Yeah. And OSG's summary is pretty spot on.
Mhm.
Thank you for that. Let's see. Any other questions? The categories, yes, though. You don't have to, and that's kind of what I was getting at before we started going off this sub thing. The categories are there that the IRS put for common business expenses, but these are common business expenses across the entire spectrum, right? So
There
this
are
is
some
like,
that matter: meals and entertainment, travel.
yeah. So I mean, like some of these might be depreciation. I would argue there's probably very little streamers doing depreciation, but if you're running a construction company, that's probably your largest expense.
Earnest? Yes. There are some streamers who, before they started working with Earnest, depreciated things, and then he's like, dude, expense it.
Yeah. I mean, yeah. But anyway, that's getting a little bit off topic.
You don't want to talk about Section 179 expenses?
Dude, I had a hard enough time with that in law school. I don't need to talk about it on stream. Okay, so anyway, my point was that these categories are there for the IRS because lots of businesses use Schedule C. In fact, every small business has to use Schedule C if they're doing a self-employed individual or if they're a disregarded entity. So they're not going to be tailored to streamers, right? But streamers can use them as suggestions, right? So advertising is still something that streamers might do. Did you pay to have a sponsored tweet or a Facebook ad or something like that? Yes. Travel and expenses for conventions, that is going to be a huge category for streamers, right? And that is also a huge category for many conventions. I know doctors go to a lot of conventions, financial professionals go to a lot of conventions, pharmaceutical sales reps, all they do is go to conventions, right? And then, so mortgage and interest, that is not probably going to apply to any streamer because they're not renting out or purchasing actual office space that to run a studio or something like that, right? But legal and professional services, that applies practically across the gamut, right? Most everybody has to hire professionals for something, and like if you're hiring an accountant to help you with this stuff, you could throw it under there. There's a lot of stuff that car and truck expenses, right? So that probably doesn't apply to streamers. But there's a lot of things that won't be there. Don't think you have to have a category for your. Don't think you have to meet every single category within that Schedule C Part 2 expenses. At the same time, don't think just because your particular write-off is not listable in a category there that you should not write it off, because there is a catch-all period where you can just other expenses where you can just list it out and make it sound legitimate. Don't just write pizza fund or something like that, right? That's probably not going to look so great. But there's stuff like that. Just give it a hire somebody to help you do it, or give it a legitimate sounding a reasonable name, and then that can still be an expense that falls under line 27A of other expenses.
Mm-hmm.
Yeah. Okay. Let's see. So don't let the categories scare you off. Streamers can write off subs to other channels full-time or not. Is there a link to contacting Ernest? There it is. How might a blizzard in the middle of April impact filing taxes? Unfortunately, it doesn't. Right? That's still the same deadline, especially because e-file is a thing now. Right? There's no you can't send in an IOU. Sorry, tax got lost in the blizzard or something like that.
Okay. Sometimes if there's a big enough storm in an area, they will grant a short extension window where you can file for an extension. This year, for the March 15th business filing, the IRS granted until March 20th window where you could file for an extension if you were in certain regions that got. I'm sure Scythe was flooding. Actually in one of these regions, but where the Twin Cities got snowed in or something like that. So they can, but it's on a case-by-case basis. And also, do your fucking taxes before then.
Yeah.
That's an official YBYB pronouncement.
Yeah. Either that or file an extension, yeah.
Come on.
Yeah.
Don't put it that way.
Okay. Yeah. I mean, it's just the way it is, right? People are going to be last minute until the end of time, right?
And then they are then they are exposing themselves to these kinds of risks, and they are getting what they deserve for exposing themselves to these kinds of risks.
There's Galen's take. Yeah. And I'm not going to argue with it. Yeah.
There's
yeah,
Galen's take.
Yeah. So while we wait for other questions, why don't we kind of answer some of the ones that we had found, right? So I went super basic, right? So first question that I said, do I need to file taxes, right? Do you want to answer this, or you want me to answer this? Okay, who can answer this the least facetiously?
The least facetiously. Likely. Yes, you probably need to file taxes. There are some situations, some very small, minor situations in which you don't need to, but
as a
you
content
should
creator,
anyways.
Okay, so here's the let's just break it down to you as earnestly as possible, and I'm not trying to make a pun there, right? So, you don't, in a normal situation, you don't have to file taxes if your income is less than $10,400 for the 2017 year if you're filing singly, as a single person, a single individual. The reason I say the reason for that number is because that is the standard deduction plus the personal exemption for a single filer, right? The standard deduction is, I want to say, what, 6,500?
Yeah, for 2017.
Yeah, and then the personal exemption is whatever that.
4,000.
Yeah, 4,900. So whatever that is. 3,900? I don't know. Yeah, something
4,000.
like that. Yeah, 4,000. So 3,900. Yeah, or just 4,000 per year. Okay. Anyway, so that is the standard deduction plus the exemption. So if you make less than that, you don't have to file because you're not going to owe taxes anyway, right? However, if you're a content creator and you are a self-employed individual, your magic number is not 10,400. Your magic number is 400. If you made less than 400 in net revenue, net earnings, then you don't have to file because you don't owe any self-employment taxes. If that is all you have for that year, barring, like, unless you're a student or something like that, yeah, well, you should probably talk to Ernest to get your financial health there, or talk to Galen to get your financial health better. But if he's taking pro bono cases, right?
Yeah, I was going to say.
Yeah, self-employed individuals. So the catch-all there, or the bottom line is, as a self-employed individual, you have to file because you do not. You have to pay taxes on your, we call them FICA taxes, it's your Social Security and your Medicare. You have to pay those taxes on all of your income because no one's withholding it for you from your paycheck. Even if miraculously somehow those two tests didn't meet your situation, there are still reasons to file. If you want to...
If you made that little, you're going to get money back.
Yeah, so if you made that little... Actually, if you made that little because you didn't work, then you won't be getting any money back.
Yes, okay, fair.
Yeah. What we're talking about is the earned income tax credit, right? So you need to, for certain tax credits which can actually end up becoming a tax refund, you need to file to get those tax credits, right? That's one situation why you might want to file even if you don't have to. Second situation, if you receive subsidized health insurance premiums by getting health insurance through the marketplace, you have to file because that's all part of the tax credit that you had got in advance from. That's how those premiums are paid. They basically advanced you the tax credit throughout the year to help pay for your premiums. And then I
remember reading this earlier. The IRS has, earlier this year, has more than 1.1 billion in unclaimed tax refunds.
That's a lot.
So, yeah.
Yeah. So those are the instances the reasons why you would have to file taxes, or if they don't apply, why you should file taxes, right? The only instances where you probably don't file is someone else is claiming you as a dependent, right? So if your dad or your mom are still claiming, or somebody else or some other guardian is still claiming you as a dependent, then you don't need to file, right? Even if you made certain income. Taxes are due. Taxes are due for this calendar, or the 2017 calendar year, so meaning the 2018 tax season. Those are due April 17th, 2018, just like we mentioned earlier in the beginning of the show. And then how does their taxes are always due April 15th normally, right? So that's why I said today's tax day, because today's April 15th. But that if it's on a weekend, then it gets pushed out.
Yep.
How are your taxes different as a streamer? right? Well, your taxes are different as a streamer because you're self-employed, and that's why we talked about that self-employed magic low threshold of $400.
Yep, and then it's not only that piece of it, and the piece you talked about of paying the Social Security and Medicare taxes, but also the piece we talked about even earlier of you can actually write off expenses to lower your taxable income. Think about how much less you would pay in taxes if you were a W-2 employee somewhere, meaning you work for someone else, but you got to write off all of the ordinary and necessary expenses that allowed you to do that kind of work, like driving to work, like eating food, like having housing, right? Like, or even just your education to get to that point. You have a real advantage that isn't available to everyone else, so that you need to actually track all those kinds of things and use it. Ernest and I have clients, like I was saying, who have their overhead be their business expenses. Sorry, I'm calling it overhead, but their business expenses in a year be 70% of what they took in because they were doing upgrades and stuff like that. And that's unusual, right? Like streamers' overhead shouldn't be that high on a recurring basis if you're full-time, because you're a streamer, you're not making like equipment. But that means that they're paying not 70% less tax, but significantly less tax. And that is a big savings. Like, I think Ernest, I forget exactly the standard rate. He charges a couple $100. And if you were someone who wasn't taking advantage of like all of these different kinds of tax savings things before, he pays for himself immediately.
Yeah. And I think like that's a pretty common misconception also, is that like people think that they can only start filing taxes as a streamer once they're full-time. Right?
Mm-hmm.
That's not the case, right? You can file taxes as a streamer, and you should file taxes as a streamer from the moment you started getting money as a streamer. And even actually before that, the moment you decided to make streaming a legitimate business operation and you started operating at a loss even, that's when you should start filing. Because, and I'm assuming if you're a part-time streamer that you also have part-time income or full-time income from something other than streaming. Well, the operating loss that you get from streaming can help offset the taxes that you have to pay from your day job. Like, let's just call it your day job or your other job, right? As a W-2 employee. Or if you, let's say you have two different self-employed individuals, right? Or two different self-employed businesses, right? Let's say you're an artist. You have a booming artist business, right? And then you have your streaming on the side, right? So if you're earning income from your artwork, but you're not earning income from streaming, your loss from streaming can help offset the taxes that you owe from your art business, because they're still both all under you as the individual. That's why that's a misconception that a lot of people think that like, oh, okay, now I'm partnered, now I need to start filing taxes. No, you can start filing them before you even become partner, as long as you're getting, if you're an affiliate, you're still getting revenue, right? You sign tax documents as part of your affiliate agreement. And that leads into the question, what do you need to pay taxes on? Just about everything, right? Whether you're working, you're doing a service, whether you're selling something, you're selling goods as you're a merchant, you're retailing, whether you got paid in cash, whether there was a contract for it or not, right? Just because it was like an agreement. Let's just say you hired me and we didn't actually sign anything, which that would be my fault, right? But we didn't ever sign anything, but I still have to pay taxes on whatever you paid me, even if we didn't have any agreement in place.
Don't hire a lawyer who doesn't make you sign an agreement.
That's
Holy shit.
Yeah. Don't, in the same vein, like, don't hire a financial planner that makes you pay them in gift cards, right? Or something.
Right. Oh my God. Yeah. No.
So
yeah, I only accept V-Bucks actually.
Yeah. You can only pay me in bits. Yeah.
Oh my God.
Yeah. So you have to pay taxes just about on everything, and I tweeted that earlier as a joke, right? From it's actually within the actual IRS publication, right? So it's IRS publication number 17 that they say illegal activities. You still have to report the income you make from illegal activities on Schedule C of your 1040 or 1040 easy, right?
Cryptocurrencies are even worse, Amp, because then if you're trading it or trying to exchange it, then you've got to account for all those things.
Yep. Yeah. So like, it's the government, man. So that's the people always arguing. Why do I have to pay taxes? Well, like you have to pay it because they're the government. They say so, and they're going to make you pay it on just about everything.
And because you used their roads, and because you weren't murdered this year, and because you probably used 20 other things, and because of your free education from growing up.
Yeah.
I mean,
there's a variety of arguments, but like, it's not even necessarily because let's just say because you're their citizen. If you're their citizen or a permanent resident living within that country, then you have to pay their taxes. At least that's how far the U.S. goes. The U.S. has what is called a global tax scheme, which is pretty unique in the developed world, actually. There's not a whole lot of other countries that have a global tax scheme. What that means is as long as you're a U.S. citizen, it doesn't matter where you live, you have to pay U.S. taxes. They have a lot of like exemptions for whatever taxes you might pay. Let's say you're a U.S. citizen legally working and residing in a foreign country. They'll give you tax credits or deductions for whatever taxes you're paying as part of that country, but you still have to pay taxes to the U.S. or at least you still have to file a return. The exemption's pretty high. It's like $101,000, right?
I don't remember. I don't deal with much international stuff. Yeah. I studied that at some point when I took the CFP a couple of years ago, but.
And then if you're a permanent resident, if you're a legal permanent resident or LPR or lawful permanent resident rather, LPR within the U.S., you have to pay taxes to the U.S. also because that one makes sense because you're in the U.S., you're working in the U.S., and it's part of what I don't know whatever your take on government is, whether you're pro-government, for government, big government, small government, whatever your take is, they played some part in allowing you to do what you do, so that's why you pay taxes.
Did you drive on a road to get to work?
Not everyone does that now, though.
True.
Yeah. Yep. Okay, so just about everything anyway. And I did get some questions on why would they even have a question or why would they even have some statement saying you need to file taxes for your illegal income? Knowing that if someone's a drug dealer, they're probably not even...
Oh, it's how they nail you.
Yeah.
If they can't get you on your other crimes, they can get you on tax evasion.
Yeah. That's how they got Al Capone. So basically, it's so that they have another crime they can tack onto your I'm assuming is going to be large. What's the
rap sheet?
Brain farted. Yeah, it's not a rap. Well, yeah, whatever their case they're going to bring against you. Yeah. So even if they can't prove all of the other, they can't. Let's just say they can't prove that you were dealing drugs, that they can prove that you didn't pay taxes, then they can still send you to jail. All right. So should I file an extension if you won't finish on time? Yes. The reason you shouldn't file an extension, and if you're at this point that if you don't have someone already working on it for you, then you probably will need to file an extension unless you think you can get it done in time. The reason you would want to file an extension, there are two penalties that the IRS can assess against your taxes for not filing and paying by tax due date. The first one is called a late filing payment penalty, right? So the late filing penalty is you didn't finish your time filing on time. They charge you 5% of whatever taxes you would have owed per month, up to a cap of like 25% of it.
It's 25 is the cap, yeah.
Yeah, for your total tax bill, right? So, however, if you file an extension, they won't assess that late filing penalty. They'll still assess the second one, which is called the late payment penalty, because you're supposed to pay by that date also. But that penalty is just 0.5% rather than 5%, although there is interest, right? So the ideal situation is if you cannot file in time, what you do is you file an extension and then you pay an estimate of what you owe. So if you pay an estimate, let's say it's over what you actually owe when you figure out and you actually get your filing done, they send you a refund. If it's not over what you owed and you still underpaid your estimate, well, you have less that's actually getting charged penalties and interest.
Yep. Exactly. It's just smart to actually it's just smart to try and do the payments that you would normally owe, be them quarterlies, be them, actually coming up to tax time, and then deal with the actual paperwork of it later. I mean, again, file to make sure that you can deal with it later, but, do that. So you could theoretically pay $5 as your estimate. Theoretically, is that an accurate estimate?
It might be.
It might be, but
probably
for me,
not,
it's not. Yeah, I was saying, my business is still relatively young, and that's not an accurate estimate. But
even if you paid an estimate of $5, that's $5 less towards penalty, or $5 worth.
Yeah, $5 less, well, you'll get 0.5% docked on it. Woo!
Well, what's the government's short-term interest plus 3%? Because that's what they're charging for interest too.
Mm-hmm.
So
yeah,
top side 10%, you'll save 50 cents. Right? So, okay, and this one is I thought this question was pretty good when I was searching for common tax questions, because a lot of the common tax questions actually don't really apply towards streamer. Like, whoa, who would have thunk it, right? But this one actually did. So for a lot of streamers who they don't necessarily, let's say you don't have kids and you don't own a mortgage, right? Because those are by far the two biggest tax breaks that you have, right? If you have dependents, right? So kids equals dependent, not necessarily kids. If you're taking care of an elderly person, could be a dependent also. If you don't have a dependent and you don't have a mortgage, what can you do for tax breaks? And I'll give my answer, then Galen, you can kind of give what your answer is, like, because I'm sure you can think of more than I can. And I'm going to take the easy ones first, just so you kind of sticky with the hard ones. So retirement contributions, student loan interest, or current tuition, right? So if you're the only situation where we talked about all this stuff about like where you don't file tax returns or whatever, where it might not be the worst, is if you're currently a student, right? Because students have a lot of things going on. Tuition is a tax deduction. Student loan interest is a tax deduction, although typically if you're in school, you're not paying on student loan interest. At least you're not required to pay on student loan interest. But retirement contributions, those are all things that can lower your tax burden, and this is primarily on the personal side, right? So this isn't on the business side of your Schedule C determining your net income. Or your net earnings rather. This is your personal side that can help lower your overall tax bill, because and if you can't tell by now, or if you don't know, how your taxes are calculated is you have your business of streaming, you have your net earnings after that, and then your net earnings go then to your personal thing, because it's all a pass-through entity. We call that a pass-through because it's all directly just sent to your 1040, and then you file your 1040, and then after you get your AGI, then you get your deductions, and then that's your tax bill at the bottom, what you owe as an individual. So as a streamer, you have two areas where you can lower your tax bill. By far the most important and probably most effective area to lower it is in the business side, within the Schedule C and your net earnings. After that, then you have limited options on how to lower it from the personal side, and this is where we're talking about retirement contributions, student loan interest, and if you're currently paying tuition, right? So what are some other tax breaks that they might have?
Or if you paid tuition in the past year. Yes. In that year, because there's the lifetime learning credit or the American Opportunity Credit, depending on when you've claimed before. So those kinds of things, and it's if you paid them. So like when I finished up my MBA in 2017, meaning that I had 5-ish months worth of payments that I was able to get a credit for. This coming year, I'm not going to pay for any school expenses, so I won't have that. And on the retirement contribution side, there's a couple things that are important to know. First of all, as a streamer, you have more options. So, second, if you're making you can potentially get a deduction if you are making a contribution into what's called a traditional retirement account. And what that means is that when the money goes in pre-tax, meaning you get the deduction today, but then when you take it out, it's taxed. If you're making contributions to a Roth account, you do not get a tax benefit today. The Roth account is the opposite of the traditional, where you pay the taxes today and then you take it out tax-free in the future. On the retirement contribution side, if you're looking at like a traditional IRA, you can put up to $5,500 in it, and another $1,000 if you're over age 50. And that the ability to take a deduction for contributing to a traditional IRA has a couple different phase out windows. Do you want me to briefly cover those or no?
The phase outs?
Yeah.
Yeah, sure. Just for the sake of,
all right.
completion.
If you're not covered by a retirement plan through work, then you can always deduct it. Basically, I mean, there's a highly deductible if you are not covered through a retirement plan at work. If you are covered via a retirement plan at work, meaning your business has a retirement account, or if you work for someone else and they've got like a 401k, for instance, then it starts to phase out at 60K, 62K in adjusted gross income as a single filer and 90K as a family. And it phases out over the next basically $10,000. Beyond those, the other two that are sort of big in terms of tax breaks, the two we already mentioned, the standard deduction, the personal exemption, those everyone gets, and those are based on your family size. And then the other one that is potentially applicable to you and is much more relevant for the average streamer because just because of age and that kind of thing, is something called a health savings account, which if you have this is a lot to go into. If you have a high deductible health plan, which means your health insurance deductible is over $1,200 for 2017, you can put in up to $3,400 into a health savings account, and these numbers change based on family size, which is you get a tax deduction for putting the money in. So you could lower your taxes today. You get, and then you can, if you use the money for healthcare costs, take the money out tax-free. So that can be pretty sweet. And that's one that a lot of people don't know about.
Yeah, and then if you turn 65, you can roll that all into a retirement account.
Exactly. The other one is the Earned Income Tax Credit, or EITC. This is basically a tax credit that you can get if you worked and made money, but not much. Yeah. And there's a whole calculator on the IRS's site for, let me see if I can find it.
Yeah.
There you go.
Yeah.
You got it?
Yeah, I'll post
it. There's a whole calculator on the IRS's site for figuring out if you can use it. But basically, it depends again on family size, but you might as well take a look at it if you're earning under like 50K. That applies to a lot of people, actually. But it's one that's harder to like define because it varies wildly based on family size. Like a single filers can claim it at something like, I think it like basically goes up per individual about the amount that it was before. So like individual filers really low, and then it doubles if you're two people, and then exactly. So it's a big range. That's worth looking at.
Yeah. So generally speaking, from taxes, and this is public policy where I guess the government is encouraging large families, kind of, right? It's encouraging families.
They're trying not to have tax penalties they're trying to make your cost burden similar, basically because you have to pay more for life in general. The larger your family, ceteris paribus. Yeah. But so they try and have you pay less in taxes, basically, to account for the increased costs. Yeah. It doesn't actually make up the difference, but they're trying to help.
Yeah, basically, kids are expensive, right? Yeah. Kids are very expensive.
Exactly.
Right? So
Joel knows next to nothing about this.
Yeah. Dude, I had a high-ass deductible in my insurance last year, and I actually met my deductible, right?
Ooh. Yeah, it's like $10K just to have a kid, isn't it? Basically, like hospital costs.
Yeah.
At least.
And this is kind of a testament to the current state of our healthcare system, but total billed all included for like what was billed to my insurance from the hospital, from doctors, whatever, everything I have you, and between like everything paid out of pocket, it was over 20 grand. Yeah, just to have a kid, right? That doesn't even include, well, that also included some like there, and it was a normal birth, but then we had some minor complications afterwards, right? So, but they're not like totally uncommon, but like,
right.
I figured that amount is pretty accurate. But what getting back to that, kids are expensive, but the kids are you can argue if they're good for society or whatnot, but I think most people agree that you, at least to have a society continue to exist, you need kids, right? So that's why the government is, they know kids are expensive, but they're trying to do what they can to make the financial burden of having children less, right?
Yeah.
And it's not just children either, because dependents can be, like we mentioned earlier, elderly.
Parents who can't support themselves anymore, siblings who are incapable of supporting themselves, or something like that. I've had some people claim to me that they are somehow disadvantaged because they aren't getting like extra exemptions for having kids. And it's like, really?
Your tax bill,
really?
Yeah.
You're right. Your tax bill's a little higher because you didn't pay the $20,000 it costs to have a kid each year.
Yeah.
Who freaking who?
So
it's like the people who whine at me for paying more in tax because they made more. Who freaking who?
Yeah.
You still keep at least 60 cents on the dollar.
Yeah.
Oh, that's so difficult.
Yeah, it may seem okay. It may seem like the government is unfairly generous in taxes towards individuals who have children, but that's also because the people who have children have a lot more other non-government expenditures.
Yes. At one point in the year, it is more convenient to have a kid from a financial perspective. At every single other point in the year, it's a lot less convenient. So just because you only see that one point doesn't make you right. It actually makes you wrong and an asshole.
Yeah, I'll agree with that one. That can be an official YBYB take. Yeah.
If you are wrong and an asshole.
Yeah, that'll be an official YBYB take. So essentially, and correct me if I'm wrong, but the earned income tax credit isn't only for people who are W-2 employees. It's
no.
Anybody who worked. Right?
Yeah.
And as a streamer, you did work, right?
Yes.
We're not going to talk about the merits of your work or anything like that. Obviously,
despite what mom and dad said.
Yeah,
we
believe
work
in them because we're here on Twitch, right? But then you did work, you did something, and then you earned something, and that's why you might qualify for the income tax credit. There's a very easy calculator to go do. It does take some time, and you do kind of have to sit there and go through the questions. But I would highly suggest everyone do it.
And if you're going to a CPA or you're using something like TurboTax, it'll also walk you through these kinds of things if you're somewhere within a range where it might apply to you.
Yeah.
You attempted to earn income? Yeah, I like that.
Yeah. The only people who didn't attempt to earn an income were those who were students if they didn't work, right? But they got other things, or just now we're talking about like they call them the NEET in Japan, but it's not. It's not NEET like NEAT, like not employed in education, or I forget what the last E is for. Something like basically you're not doing anything. If you're really just not doing anything, you're not in school, you're not employed, you're not in education, then you are
training.
Something like that. And then if you're not actually attempting to earn income, then you don't qualify for it.
Yeah.
And that's a public policy that that makes sense. Okay, so now we talked about I think that's what it was. Thanks, Amp. Why did I think there was 3 E's? I typed it out and I still was thinking about the third E. That's kids for you there. Okay. Now that we talked about all of that, right? We talked about why you should pay taxes. Do you need to pay taxes? What goes into the calculation of taxes, which these are pretty frequently asked questions. We answered some questions in chat. And if you do have chat questions, please go ahead and continue to ask them. We'll try to get to them. The final one is kind of, or the two big ones are like, let's just say you can't afford to pay your taxes. You have a large tax bill. What can you do? Again, what can you do? You're the financial planner. Yep.
Work with the IRS. You're not alone in this situation. They can help put you on an installment plan to make payments where you can make payments over time. The amount that they charge you is going to be less than you would get from another lender. There are lots of specific tricks and tips that you can do that I'm not going to go into because they're really easy to screw up. So Joel, for you, ways to arbitrage your rate, basically. But in general, work with the IRS. They want you to make the payments, but they also want you to continue to be a working, productive citizen of the United States. So they have plans that make it more manageable. It's it's still not like easy or fun,
Yeah.
particularly, but they do actually like have systems in place to help you with that.
Yeah.
And it's better to start on that kind of a thing sooner rather than later.
Yes.
Even though it's painful, not fun, all those kinds of things. Because the longer you wait on it, the more those other kinds of penalties rack up, and the worse that it gets. You're just putting yourself into a, self-reinforcing destructive cycle as opposed to actually making an attempt to fix it.
Yeah. So, and Galen's absolutely right. Like it's not a great situation to be in by any means, right? But like some of it is kind of self-imposed. But the IRS doesn't benefit from throwing your ass in jail, right?
Nope.
Because they can't take money from you in jail. In fact, the government has to pay money to put you in jail. So they are willing to work with you generally, right? And they call it there's an offer and compromise situation that you can do where basically you're seeking relief from the IRS, and then you're also doing some sort of installment plan on paying. But they won't make you pay 100% of what you owe, which is the offer and compromise portion, right? But you're trying to pay some of it. What would you think about this? What's your take on this argument? Depending on the size of your tax bill, if you don't have the cash to pay it, taking a loan or putting it on a card.
I don't like putting it on a card because you'll pay higher interest rates there unless you, and this is one of the things that I was intentionally not getting into earlier. You could get like a balance transfer card where they have like a 0% for a year, but then they shoot up precipitously after that. So like,
if you do that, make sure you pay it off before the promo.
Yeah, if it's like a personal loan from your parents where they aren't going to charge you much and you're going to actually be diligent about repaying them, like sure. But I mean, the IRS is generally going to give you better terms than most lenders, right? They're not.
I guess I can from a financial perspective, definitely, right?
Right.
But then I guess the argument then is in one situation you're on an installment plan with the IRS, and the other one you're 100% in compliance with the IRS because you paid everything on time. Then you just have a loan from something else. And I can't speak to, I don't know, because I don't know how that affects, like being on an installment. I don't know how that affects your personal credit score. I don't know how that affects all those other things.
I mean, your credit scores doesn't do great from you having an extremely high utilization rate on the credit card, for instance.
Yeah, that's the same thing. Yeah.
I mean, there are definitely, you can definitely look at a couple different, there depends on your current financial resources, but if you are in a position where you don't have the cash to pay them, there are definitely things that you can do, but you'd want to really do the analysis on whether or not it's worth it.
Yeah.
Because getting money, like, in a pinch costs something always, and you need to analyze whether or not it's a better deal that you'll get from the IRS or from someone else.
What if you only owed like $100
and you can't pay it?
Yeah, let's just say you live paycheck to paycheck. You just simply don't have that $100 right at payment time, but you know you can pay it off. Like if you can pay it, if you can use your credit card and know that you won't even carry the balance on the credit card, yeah.
I mean, I guess, yeah, that's a really niche situation.
Yeah, but
I don't have $100 today, but I expect to by the 30th.
Yeah, let's say you get paid month to month rather than every 2 weeks. Right, and then like you got paid at the beginning of the month, you had to pay all your bills.
Yeah, I mean, you could definitely do it that way then.
Yeah. Well, yeah, this is just getting into hypotheticals, right? Like we're really, if that's your situation, definitely talk to somebody, right? Because that's a very situation specific answer to this. So talk to Galen, talk to Ernest, figure out what you need to do as far as we want to get you back to being in compliance with the IRS.
Yeah.
Because that's the best. That's when you're financially solvent and you're not like, and you don't have that burden over the back of your shoulder. That's just like, the IRS boogie monster. Yep. And Galen mentioned this earlier. Absolutely, don't file because you can't pay. Right?
Yeah. No, that's a bad decision.
If
that's the worst decision.
Yeah, while we can't offer you a correct solution because it's very situation specific, so we can't give you a definitive answer. We can give you a definitive wrong answer, which is
sticking your head in the sand is generally the wrong way to approach problems.
Yeah, well, the ostrich approach that Galen just mentioned is usually the worst idea when it comes to legal stuff, or financial stuff, and this is both a legal and financial thing, right?
I understand the impulse for sure.
Yeah,
like there are definitely things that I would love to not have to deal with.
Yeah,
if I could just ignore them.
Yeah,
but long term, if you're going to be around long term, then you should also deal with your long-term issues like this.
Yeah, and like I had a law professor who made it funny. It's an interesting anecdote. For a lot of physical things, like we're talking your health, right? For a lot of physical things, sometimes your body will just heal itself over time, right? So that could be like if you have a cold, then you just wait it out, right? You don't necessarily have to do anything for it. You might take some stuff to help the symptoms be less annoying, right? That does not apply for money or law. Usually, if you just leave it alone, it's not going to get better. It will get worse.
Exponentially so.
Yeah. So, and that's why that is absolutely the wrong thing to do, which is the ostrich approach. Talk to somebody, get relief. There are a lot of services out there. Be wary about the services you hire because some of them are definitely better than others. Some of them are just downright fraudulent, right? But there are also a lot of nonprofit causes that are there to kind of help with financial literacy and help you to get financially solvent. Let's say, so that's our take on that. How do I know how much I owe, Galen? If I'm filing, how do I know how much I owe?
Well, there are a couple different ways to figure it out. You can do it yourself. It's a decent amount of work and it's a lot more work if you haven't been tracking things throughout the course of the year. So you can definitely do it yourself. It's as a streamer more complex, but like if you want to use something like TurboTax and walk through, like don't do it on paper, Jesus. I'm not trying to say that when I say, do it yourself. I mean, use something like TurboTax where you might pay a bit for it, but you can walk through it on your own. Again, I'm going to use a CPA this coming year, but I used TurboTax this past year. And part of the reason I was comfortable doing that even to this point is because I am much more comfortable with tax code than average. But they're pretty good. And, depending on, for streamers, you'll pretty much always pay because they make you pay for the self-employment side. You can also, if you're in a situation where you didn't earn much, there are also a lot of like volunteer services that will do your tax prep for free. You'd have to look at what's around you locally, but there are services that do that. If you're in a position where you earned a pretty decent income from streaming, pay a CPA. Like don't go to H&R Block because they don't tend to know what they're talking about if you're much more complex than a W-2 or two W-2s. But pay a CPA. It'll be a couple $100 and you'll more than likely get your value from that. I mean, the only people that I know who don't get their value from a CPA are the people who, especially considering streamers, like if you were a streamer where in your past life you were an enrolled agent or a CPA, and you tracked all of your stuff diligently, and you kept up on tax law, and you didn't earn enough that your time to do all of that filing work and stuff wasn't worth the couple $100 you'd spend.
And then, you're not concerned about an audit, or you don't want somebody else on like
maybe then you won't get your money's worth.
Yeah.
But if you don't know current tax law, or you haven't worked with business stuff before, or you are just making enough that the couple hours it'll take you to do is you would earn more streaming, for instance, or just earn more by relaxing so that you're better on stream your next day, like then it makes sense to pay someone.
Yeah, I can't think of anybody that would fit that, and I know quite a lot of streamers.
That's why I'm
Yeah.
so like,
Yeah, essentially, yes, there is a financial cost to hiring a tax.
I can picture one person. One.
We'll talk about this afterwards.
Yeah.
So there is a financial cost to hiring a CPA or an accountant or anybody else to prepare, right? But what you get back can be a financial benefit in that they help you save more, right? But it's not just that. There's also peace of mind that you have to deal with, right? So number one, you don't have to stress about it.
Exasperation, all these kinds of things.
Yeah, you don't have to spend the time to do it. You don't have to worry about, let's say you do get audited, you do have somebody else that's also on your defense. Like, not necessarily everything comes with audit defense, but like generally if someone is familiar with that and they do want to help you with audit defense, then that's there also. There's just a lot of benefit to that, and like neither one of us is a CPA.
No, I don't do taxes.
We're not even.
I'm not an enrolled agent.
Yeah, we're not enrolled agents. We don't have a pay tax preparer identification number. We don't offer these services. We're just very, very convinced of the merit of these services.
Oh yeah, for sure.
Talking about that, right? So
on the peace of mind side, my wife gets stressed about doing taxes. She doesn't even do our taxes. I do. Literally, her entire job is provide the 3 documents she got from her employer this year.
Yeah.
But she still gets stressed about it because it's a stressful thing. So like,
don't they just mail it to you? Can't she just like give you the envelopes or just like, hey, get look through the mail, and that's pretty much she gave you those documents?
No, they send those things electronically nowadays. Are you kidding?
I still get some. Well, no, that's not true because I had to mail out W-2s, so that's why.
Yeah. My wife's a W-2 employee of a company. Yeah. She just has an online portal where she gets all of her stuff. So she does have to log in and like print it out or leave it there.
Yeah.
Like for me to like logged in for me to see, but
basically, yeah. At this point, if my wife gets something that's like she needs me to do, she just forwards me the email, and then at that point she expects me to. That's like, all right, my responsibility is done. Hit forward. All right, that's not my now. It's just your responsibility. But yeah, if you work for a small business as a W-2 employee, you may not necessarily have an online portal.
True, that is fair.
One. Yeah,
that is fair. She works for a very large business.
Yeah. But yeah, any other questions in chat? I know, like, we actually managed to make it an hour and a half, even though we didn't get any questions. We got some.
We did get questions.
Yeah. But we sourced a lot of our own questions. You know what? I should have just asked somebody in chat to pretend to be someone with these questions, and then just fed them the list of questions, just to make it seem more like an actual hotline. Right? Where's Tyler? I could have told Tyler, hey, come in Discord, ask me these questions. Yeah.
Do we trust Tyler's interpretation?
Yeah.
Do we though?
Well, I would basically have it written out as a script, and that's going to read from the script. Yeah. Or I could ask OSG. OSG, thank you so much again for all the work you've been doing in chat, doing the summaries, doing that, and stacking up the questions. That's always welcome. Like we always appreciate you helping to drive the conversation. So, but any other questions in chat? Related to tax, preferably. If not, like just related to streaming and business and finance. Yeah. Yeah. What are you doing these days now that you? Oh, how'd your move go? Let's talk about that. Because moving can be. You can deal with that in 2019 tax season. That's all the stuff you can write.
We're gonna have to move. That? Our lease is up. Oh yeah, they changed that.
I guess it's important to point that out. Sorry, just to cut you off. All of this is for 2017 tax year. None of this applies.
2018 is completely different.
Yeah, 2018 for meaning the taxes that you're going to pay April of next year for the taxes you have this year are totally different because of the Tax Cut and Jobs Act, which that'll be an interesting episode when we come out. The IRS actually just recently released guidance for self-employed and freelance individuals for the 2018
on the QBI deduction.
Yeah.
Yep.
So
move went pretty well. We had a bunch of people come and help us move, which was nice. The biggest issue is that we were previously renting a place from my in-laws, so it was like a house and a large house, and now we're renting an apartment, which is still a nice apartment, but it's a lot smaller than the house was. So we have a lot of like random things that were able to be stored like on countertops or in the extra cabinet space that we have, or that kind of stuff that no longer can be. So there's like, oh crap, what do we do with all this kitchen stuff?
Sell it on eBay if you don't use it.
Well, it's things that we use, just not like all of the time. Where it's like a waffle maker or a rice cooker, or you know what I mean. Like we definitely use them,
Yeah.
but not so often that they like the coffee maker. Yeah, that should sit on the counter. I use that a couple times a week at least, and the only times I don't use it are because I'm at my co-working space, which has coffee.
Yeah.
So that's a pain.
Does your apartment come with storage space?
Not really. Like there's not an official storage space. There is a washer and dryer. That's not. It's weird. It's a washer and dryer that is not. It is only ours, but it's not technically in unit. In that, like right back there, there's a sliding glass door that leads out to a small enclosed porch that then has a door attached to it that is where the washer and dryer is, and there's some storage in there. So it's like.
But you're the only one with access to that area.
We're the only, like, our front door key unlocks that door. It's enclosed and it's covered, so like you technically walk outside.
It's like a closet off the balcony.
Yeah, it's like a detached garage, sort of, except it's a detached washer and dryer. But the place is really nice, and it's nice. Yeah. It's kind of nice to have like neighbors again in a way. Because
you have neighbors as a house, you just not as in constant contact with them.
Yeah, exactly. And so but it's nice. And like we did a little bit better setup because when we moved to that other place, I wasn't self-employed, so the home office was like a joint office, which is why you could see like my wife's desk behind me and stuff like that. And now it's like no, this is my office.
That's cool.
And yeah, exactly.
There you go. Then yeah, you still can 2018, right? Home office stuff.
Oh, the home office deduction, yes.
Yeah.
For sure. Like we're gonna be writing this
that entire room off, yeah.
Yes. Yeah. And it is exclusively used for my office versus previously it wasn't. We couldn't do the move. They're getting rid of the move stuff, which we wouldn't have been able to do anyways because we weren't moving far enough and not specifically for work, but they actually just got rid of that too.
Yeah.
That's what I was thinking you were referencing.
Yeah, that was what I was referring to. But I couldn't remember if that was one of the things that got axed. Which is, I guess we didn't really talk about it this episode, but there are itemized deductions versus standard deductions. Because streamers have, like the streamers as a group generally don't have too many itemized deductions. I'm going to just put that educated guess out there.
Yeah, I mean if they're homeowners.
Yeah. That'd
be the big one. That's a big one for most people.
Yeah, or medical expenses, right?
Charitable deductions for some people.
Yeah, so like generally speaking, they usually deal with standard deduction. So going into 2018, standard deduction is getting doubled. A lot of itemized deductions are getting
it's not that they're getting rid of them; they're just becoming less relevant.
Yeah.
Right.
Yeah.
If it used to be that $6,000 to charity pushed you into or $6,500 pushed you into the itemized deduction, now it's $12,000, right?
Yeah. So
the floor went up a lot.
Do you think that hurts charities going forward?
And
there's a lot less tax incentive to give to charities.
No, but because the most of the money that they were getting either was people who weren't taking the deduction anyways. Like my wife and I give easily over $1,000 a year to charity.
I think that's the interesting thing.
But we weren't doing it for tax benefit. We were just doing it to give to charity.
Yeah.
And then the people who would be getting the deduction tend to be giving so much that again, it doesn't matter.
Still be over the standard.
And they also tend to have the mortgages at that point, and they also tend to have all the other things. The big one is going to be the state and local tax, at least around here in California and also in New York. The state and local tax cap is going to be a big one for people who have mortgages. I don't have a mortgage around here.
I just think that's funny because a lot of times charities, at least in my experience, the tax benefit of charitable contributions is a selling point for charities. But then in reality, very, very few people
Oh yeah,
actually.
no, it's totally a selling
that.
point.
Yeah.
Even like
They all say it. Yeah.
yeah. Oh hey, it's tax deductible. It's like
Yeah.
I laugh every time I hear it because like no, it's fucking not. At least not for most people.
No,
like
well, technically it is. It's just you're not going to be using it. Yeah.
they're not wrong. They're misleading.
Yeah.
Is what I'll say. And they have to know. At least someone at that organization has to know that it's a misleading statement, right? Like because you have to give so much for it to be a tax deduction, and that's not like it's not like a bad thing to do, but
yeah.
For you as the individual, it's still not like bad to give to charity or something like that. But it's definitely like whenever I hear that on the radio or something like that, I'm like, okay, sure. When NPR's like, give us your junker car and we'll deal with the paperwork and you get a tax deduction. It's like, if it's a junker car, you're not getting a tax deduction from whatever it is that you're giving them.
Yeah, there's some Catholic charities around here that's like, give us your old car. Yeah.
Right. Which was like, if you want just someone to help you get rid of the car, that's great.
Yeah.
But like for the tax deduction side, nah.
Yeah, because like how much is they usually estimated it to be?
I mean, if it's a junker that you're just trying to get rid of instead of selling yourself, it can't be worth more than $1,000, I would imagine.
Yeah, but I mean, well, $1,000.
My brother-in-law just sold his old car for like $2,500 at a lot specifically designed for people to come buy and sell cars in cash. So like, and it took him like 4 or 5 hours of work, maybe, right? Like they handle most of the stuff.
Yeah.
So like, I mean, I'd work 4 or 5 hours for $2,500.
I think the last time I had an old salvage car, I just took it to a salvage yard.
Exactly.
Yeah.
But again, so it had to have been worth a little enough that it wouldn't also by itself get you to do a charitable deduction thing. We're probably boring people at this point. I'm sorry.
That's okay.
But
yeah. But yeah, so and anyway, like that was a very roundabout conversation to say that 2018 is going to be wildly different.
Yes.
Because your standard deduction will be doubled. Which
if you're a streamer, you will probably pay less in tax.
Yeah, which is generally better for streamers because you will pay less because standard deduction being doubled is something that you will be able to
and the
take
QBI deduction.
Yeah.
Dropping rates plus the QBI deduction.
Yeah.
For some of my clients, we've been doing who didn't yet have retirement accounts set up for their streams. We've been doing fully deductible traditional IRA contributions this year, which we're then immediately converting to Roth for a permanent tax savings because they're deducting it on their 2017 taxes. Mm-hmm. Say they're in the 25% bracket, right? Yeah. They're deducting it on their 2017 taxes and getting a deduction functionally on 25% of it.
Yeah.
And then they're immediately converting it to Roth. And that counts against their 2018 taxes, which if they're still in the same bracket is actually 22%. And if they're a streamer, they're getting the qualified business income deduction of 20%. So they're actually only paying 17.8%. So they're actually just immediately saving the 6.2%.
Yeah.
Or whatever it is.
That's something that can only happen until Tuesday.
Oh yeah, exactly. Yeah. No, it's very niche, and it's like specifically with like self-employed individuals who don't already have a retirement plan for their business, or people who are earning less than $62K a year.
Yeah.
But I mean, it's a permanent tax savings.
Yeah.
Right. That is tax that they'll never pay.
Yeah.
And for a lot of my clients, the amount that they're saving just in that permanent tax cut from that one move, not even counting the like just deduction that they get in this year, is somewhere between a half and a third of what they're paying me for the year.
Yeah.
So ignore like the rest of the advice that I'm giving them, helping them their financial situation. That one thing is like, boom, easy win this transition to 2017 to 2018.
If you're in that position, this is a good one-off.
If you're in that position, boy, you better hope you already have an account open at some financial institution tomorrow. Like,
how long does it normally take?
I've had some. Normally, you can do it in one day. I have had some clients who, because they had nothing before, got caught up in, I identity verification things.
Gotcha.
Like we started this a month ago and they're still going through the process because it's like largely paper and things like that.
Yeah.
Most of my clients have not had that issue. Those that have, it's been horrible for.
Yeah.
And I don't envy them.
Okay. All right. Well, that is pretty much all we have, unless anybody else in chat has more questions regarding taxes. For those of you who are just joining us, I do apologize, but we covered a lot already. Please go ahead and check out the VOD later once this is available. I know that Loco and company do a very good job of making everything available on VOD pretty quickly.
Loco and Co.
Yeah. 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 And we do have some sources available if you guys need them. If you guys want to hear our sources, no shade being thrown. We're not afraid to list our sources, and to share our sources. But this is what this means. This episode means is that being the last minute your tax time hotline, this is actually the end of our tax theme for 2018, right? Because if you're still dealing with taxes afterwards, which it's okay, but you'll have to go back and check our VODs, because going forward, we're going back to business hygiene, which is the theme we were working on before the start of tax season. And actually, we covered in part of our business hygiene theme, we've already discussed organization on your brand, your business. We've talked about building relationships. We've talked about, what else have we talked about?
I don't even remember at this point. It's been so long.
We've actually been doing this show for a while, even though it's not always been consistent.
Yeah.
Yeah.
What the hell? What was it that we talked about?
We did
Business
the intro.
philosophies.
Yeah, business philosophies.
We talked
did
about
the
business
intro.
philosophies.
Yep.
What else? Keeping good financial records.
Yeah, that's part of the organization, right?
Yeah. So, anyways.
Yeah,
I
but
think
next
that's
we're
what it
going
was.
back to business hygiene,
Mhm.
because even though you had to deal with taxes, there's still a whole other host of stuff that goes into your brand in running your business, right?
Mhm.
Taxes are definitely a large obstacle for many streamers,
And they loom large this time of year.
yeah, definitely this time of year. But there's still other things they need to deal with, including self-care, right? So that'll be the next episode, finding balance between your business and, because you as a small business owner and then you as an individual, so that you're not just burning the midnight oil all the time and then running into burnout for your business.
Yeah, burnout sucks.
Yes, it does. All right, where can they find you, Galen?
You can find me. I'm pretty much always on Twitch, but you can find me on Twitter at twitter.com/GalenHDEC. And you can find my blog at pajamapantsfinance.com. I put out an article every week, mostly. I'm very good about every week, unless like I was moving, so I didn't put out an article on not this past Monday, but the one before. But pretty much every week on some sort of financial or business topic relevant to streamers. I think the one going out this week is a brief write-up on when you might need life insurance, because that one was a question I randomly got a couple times the past week or so. And then my business's website is buffyourfinances.com.
Yeah, definitely. Life insurance, if you have dependents, definitely.
Yeah, exactly.
All right, so yes, Galen, my wonderful illustrious co-host here on Your Brand, Your Business. This is a show that we started after working together for the Going Full-Time panel at TwitchCon. So this show is all about what it takes to be a self-employed individual on doing content creation, not just on Twitch, but whether that's you're a YouTube creator, whether you're a mixer streamer, what have you, just any kind of self-employed online-based content creation, which is what we hope is going to be a continually growing market, and because we love the stuff that we can find out here.
Oh, yeah.
Right? So we just want to help you to be able to do it better, right? My name is Joel. I'm an attorney. My background is primarily in business and tax law. You can find me at Twitter/ShengAtLaw. That's also my handle here on Twitch. Thank you guys for being here. Thank you for the questions and for just participating in chat. We truly appreciate all of you guys, and that you're the reason that we make this show, whether you're watching it live or you're catching it on a VOD. All right, thank you. We'll see you next week for going back to business hygiene, work-life balance. Bye.
Bye.